in Sydney, Australia. Welcome today. It's going to be a fun webinar. Today I think we're going to look at what's going on inside the system a little bit more deeply. I assume most of you'll have to excuse the light in the background. It's giving me a bit of a halo effect at the moment. But I guess first things first, before we get into what we're going to cover off on today, could someone just come down the chat box, just let me know where you're coming from, what your name is, just so I know that people can hear me. And then after that, we'll move on. I reckon today we're probably going to take about, I don't know, 35 to 40 minutes, maybe longer. We're definitely going to dig a bit deeper into the Trading Safely program. I know I've had heaps of feedback over the last sort of 5 to 6 weeks. So there's quite a few people have joined up with us, and it's been pretty quiet, I guess, the last sort of few days coming into the election. We really haven't done much, and that's been a deliberate choice, just to avoid any of the volatility and whipsawing coming into the US federal election. But I'm sure as of next week, the signals will start to come through thick and fast again, and we'll have everyone pretty actively involved. So just once again, if you can hear me, just come down the chat box and just let me know where you're coming in from. Unfortunately, Sean couldn't be with us today, so he sends his regards. And today I'll be picking up the program and running you through all the working parts of the Trading Safely system, so that you can really sort of get a good look at what's going on underneath. And I guess it is not a black box, this system. Everything is open. You can see exactly what it does and the reasons why it makes its decision. So that's one of the key points that we want to get across, is this trading system of ours isn't just a black box. It does, we've made it extremely simple, but it does require some human interaction to understand what's driving trades. So we'll cover off on that. So I guess without further ado, we might just keep moving forward here. And I'm going to start sharing screens so that we can have a look at, I guess I wanted to start with, maybe what, a view of the world that a professional trader might look at. So I'm just going to share screens. Okay, so this is a professional trading program. It's not Chart IQ, and it's not what the Trading Safely system is, but it does give you some insights as to what a professional trader might look at. This is Apple. You're probably wondering what all the lines are there. Well, they're support and resistance, but they're in different time frames. So the white's the daily time frame, the blue's the weekly time frame, and the red is the monthly time frame. And the two studies at the bottom of the chart are tracking what happens across multiple time frames. So this is using very advanced indicators, and it's really quite an expensive package. You're probably looking at paying in the vicinity of $25,000 a year. But if we now come back to Chart IQ, you can see what's going to be available in Chart IQ. So if I share screen now and go back to the chart IQ. Okay, so here's your view of the world. Here's Apple, the same stock. Now, you'll notice now we have trading safely turned on at the top in your chart IQ package. In here, there's a variety of indicators, and we've got sell signals. We've got studies that enable you to look at every time frame instantaneously. We've got studies that tell you where all the multiple time frame support and resistances are. There's a whole host of information here that's driving the program at the bottom. So this trade safely indicator at the bottom is the system itself. So if we were to turn that on now, I just showed you what the professionals see, but you can see here, well, this is what you get to see at the most basic level. And I want to just stress that this is the trading safely system at the most basic level. This is what you'll see if all you're interested in is trading, and you're not interested in what's driving all the signals, then this is the place for you. It's just a matter of selecting the drop down and then selecting the trade safely system, and from there you obviously get buy and sell signals. So if we start in the top left on Apple, there's a sell signal. Pink line is our protection line in case the market goes against us, and this trailing brown line is called our trailing protection line. And these numbers are where we want to take 25% profit. So number one here, we would have taken some off, would have taken some more of our position off at number two, and so on and so forth. Interesting here on this sell signal here, the market had earnings ahead that week, so we just would have ignored that signal altogether. So when we get signals, we always look to check if there's any announcements coming up in the week ahead, and if there is, we just ignore them because we just don't want to, we don't want any part in, unexpected events. And sometimes they can work for you, and it can be, awesome. But in our experience, look, we just want to have a simple, consistent approach, and trading news for us isn't a smart thing to do, so we tend to leave it out. And look, correspondingly, the green triangles are our, they're our buy signals, and we take profit at the numbers that appear above. And so, really, it is quite simple. You only have to come in and check once a day. Well, what's the program telling me to do? And so last Friday there was nothing to do. I mean, we actually went in a position as we'd been closed out of this by this trailing stop. So the day that the market on this candle here went below the trailing stop, that was the end of that position. So right now we're neutral in Apple. But I think the point of today is that we want to start showing you guys what's lying underneath this, because we've had heaps of people come down and say, look, Sean, Jeremy, this is awesome, but what's actually going on underneath here? We want to understand, and so we're like, well, wow, we better start explaining to people what's going on. But obviously we're pretty mindful of not being too complicated, even though what's underneath is not straightforward at all. We've made it simple enough for you guys to use. So I just want to touch on, a few bits and pieces that do lie underneath this program. And I think over time, seeing as this will be like a weekly event, you guys are going to get the benefit of learning in detail what's going on. So I think probably the best place to start is, I showed you that chart of a professional program at the start, but we can actually replicate that in trading safely. You'll be pleased to know. So up here, I think, I've got something predefined just to give you an idea. So if we click on this, okay, so we can actually replicate what's going on in your professional package. Now, I won't spend too much time here because we're gonna get to that step by step, but I might just flick over to a really basic concept that underlies our program, and that's the concept of peak, which is basically calculating support and resistance. So like the red line at the top, that changes whenever you get a peak. So in this instance here, we define a peak by like a five bar candle pattern where we have a high and then you have two lower highs either side of it. And when that five bar candle pattern happens, then this red line changes. So you can see every time the red line steps down or steps up, it's because it's had a peak. And similarly, the blue line at the bottom, you know what, I'm actually going to just start up a highlighter, the cursor highlight, so just bear with me for a second, guys. I forgot to turn this on at the start. Okay, that's going to be a lot better. Okay, here we go. Yeah, so every time we get this 5 bar candle pattern, we get a peak, and that's when this red line changes. So, and then once again, when we get a trough, which is defined by a low that has two higher lows either side of it, and then when the blue line changes, it tells you that pattern's happened again. The thing is, what we're interested in is, well, which of those peaks and troughs are, which are the important ones? Because, typically these support and resistances, once they're broken, then you want to be out of the trade. Okay, so you'll notice in this uptrend that price held this low up until here, and on that day there, that candle closed under peak, and that should have been the end of that trade if you were sticking to rules of support and resistance. So, and Sean's, obviously Sean is an award-winning author. He's won the 2014 Technical Analysis Book of the Year, and I know I've read that book several times. And he has, he's probably spent over 100 pages just covering this topic. So it is very important. But one of our studies, if I just insert it here, peak. I want to show you the difference between our version of Sean's version of peak and version of peak that you're looking at. Okay, and I'm actually just going to come in here and change the colors so that you can see it. I'll change it to black. Okay, and don't forget we're looking at the daily time frame here. So here's the original peak study in red and blue. It's showing you peaks and troughs. And then here's the trading safely version of peak, the black lines. So what really stands out is that these lines don't change anywhere near as often. And the reason that happens is because the program is identifying exactly what goes on at every peak and trough, and then can make a distinction between important highs and lows. Critical, because what it means is when these lines change, they're changing for a very, very good reason. Okay, so if we look at this, we look at the line where the cursor is right now, you can see the last time that changed was back at the start of the year. It dropped down. Well, guess what? That line hasn't changed all year until September. In the meantime, however, the original peak study is changing all over the place, but you can see now that this line didn't change for ages until recently, and look what it did. It's marked the high. So by tracking which highs and lows are more important, we can get some insights into when markets are making important highs or important lows. So that's a really important concept, and it sort of underpins a lot of the system that we trade around. So what you're looking at there is just peak in one time frame. Day system is that we calculate these adjusted or qualified levels, if you like, for multiple time frames. So we're looking at much higher time frames, all the way from monthly, quarterly, semi-annual, and even yearly. We reference yearly candle data. And so the levels that we get in our system to trade off are all qualified, and they're extremely robust. And more often than not, you'll see markets just bouncing between our levels, just like a riverbed. You know, the water running around, bouncing off the sides. It's exactly the same. So, and I think that's a really important concept for people, is to understand that time is the critical driver in markets, and then followed by price. So we have tried to create a structure that looks at every time frame, which separates us, we think, from the pack. And then what we do is we try and take signals that Sean and I have developed over a long period of time. When we get our buy and sell signals, we make sure that we only ever accept them when we're trading at these support and resistance levels that we've calculated. And so that way, the market always comes to us. So we're never in a position where we have to chase the market, or you know, we never buy breakouts. We very rarely to never sell a breakdown. It would be rare for us to do that. Typically, what we're doing is waiting for a market to pull into a support or resistance level, and then we're waiting for our buy and sell signals to come up. So if I just take off this daily time frame, and then I want to show you a view of the world where we do the same thing that we did for the daily time frame, but we do it for higher time frames. Okay, and so that's what you see here. So these blue and red lines, they're really important support and resistance levels, you know, that we look to trade off. So, you know, we can get a variety of signals, as you can see, but we're only ever interested in the ones that occur at support and resistance. And that's a critical concept to understand. And I think that's why, for us, you know, we don't have to spend a lot of time looking at screens all day. Because essentially, once we turn the system back on, like we did here with Apple, you can see now these signals that are coming up, they're always occurring at the blue or the red lines. And so that's what's underlying the program. You know, it's very powerful support and resistance from much higher time frames. And look, we're going to go through a few examples today, and I'm going to show you, and it's just going to blow you away, and you'll be like, wow, you could see all those levels coming, and the markets just sort of bounce off them. And that's how our program works. So we can scan global markets worldwide, looking for when the market closes next to all these really powerful support and resistance points. And when they do, we're just waiting for these signals to occur at those support and resistances, and then we just go check it out. And if they're good, then we email you. It's really pretty straightforward. I might show you. Let's have a look at crude. I wanted to show you something that's pretty cool. One of our indicators here. It's called time area. So I'm just going to load that up. And I know there's probably going to be questions, but I'll take the questions at the end if you don't mind. So I'm just going to turn off the daily time frame. But here what we're doing is we're referencing many time frames. So we're building a structure, and this structure underpins the trading program. So the first thing you can see is the green line, that's the weekly time frame. The red line, that's monthly. The purple line is quarterly. Brown line is semi-annual, and the orange line is annual. So in the case of oil, obviously coming into the new year, oil had been smacked pretty hard for a long time, and it wasn't really until February that we saw the first sign of a low put in. And for us, for Sean and I, the first clues are obviously when markets flip from being under resistance to being under support, and you can kind of see that here when we look at this red line, monthly level. We had price under it down here, so it's still acting as resistance, but then it flips to support. Okay, so that's an important concept there for us. When markets go from flip from resistance to support in many time frames, because what that does after the monthly goes from over to under and becomes support, you've got to think of trading and markets like it's a bit like an onion. Each layer of the onion is a layer of time, and so when the monthly goes from resistance to support, that opens up the next time frame, which in this instance is the quarterly time frame. And here at that point in time, you can see the enormous gap that opens up, and the market quickly fills the gap up to the next time frame. And because markets are fractal, and that means whatever happens in the smallest time frame essentially can happen at the largest time frame. We see the same process repeating over and over here. So the monthly goes from over to under, then the quarterly does the same thing. It's acting as resistance, but then it flips down here to support. Except the difference now is we have the short-term momentum rising at the monthly level, and now we have this quarterly becoming support. And sure enough, the market back tested into this support zone now, and then opened up a new gap in time. So then we had this semi-annual level that became the next target in time, and this process just goes on and on. So you can see here that this semi-annual resistance is now going to flip to support. Okay, and so much the same as the monthly flipped here, then the quarterly flipped, now the semi-annual flips and becomes support for the market to bounce out, and then again it comes up to the test the next time frame. So and look, if you don't want to look at the market, if you don't want to look at this price action like this, we can always just grab that study and we can just put it underneath. So if I click on time area 1, there it is there. So now I can take off as an overlay, and now you can see the same thing at the bottom. So here's the process. The red line flips under, the purple line flips to support, then the semi-annual flips to support, and later in the new year, this yearly level is obviously going to flip to support. And if we look at them, if we look at the spread of range here of price, then the annual level is going to flip to support somewhere around $38. So next year, if the market sort of retraces into 30, 38, that's going to be a critical level to pay attention to, because if that holds, and obviously the market can then slingshot up higher. But unless you're looking at all these time frames and you have this structure, then none of this is obvious or apparent. So this is a really critical feature of our Trading Safely program, that we take signals at much higher time frame levels. Even though we're trading a daily chart, we're effectively looking at yearly, semi-annual and quarterly candles all at once. And that's why we get such powerful signals at times, and that's why we can tell when markets have got room to run, and we can tell whether a market can really fall quickly, or the concept of having space in time that we just touched on before. Like here, when you see all these gaps open up in time, it just means that the market can move in those gaps very quickly. in the case of oil here, the market's been falling very quickly, but if we just look at this study here, you can see once we cross back under 48.28 that there's a gap between the orange and purple lines, and so the short-term blue squiggly line just filled that gap very, very quickly. So for now, even despite the fact that oil's been coming off, it is in an uptrend, and right now it is at support. So if we get signals to buy oil after the election, we're obviously going to be looking to take them because we think that the market is now predisposed to going up, and we're happy to be wrong, because if we're wrong, then we won't get a buy signal. But we can kind of see that the market is coming to support, and that's where we want to pay attention to enter our buy and sell levers. And look, if this is all too much, we're going to be doing this every week, so you can ask questions, and we can revisit the stuff in due course. But I just wanted to also have a look at some of the trades that we've had on recently. I mean, the trading apprentices, I don't know if you guys were up to date with how our trading apprentices went, but we basically took a few people that had very little experience, and we gave them about 4 hours training, much the same as I'm giving you the training now, just a few one-on-one sessions, and then we gave them about 5 weeks to trade. And the process there was we'd just send them signals each day, and they would just look at a screen like this and just obey the signals that the computer was telling them. So I know, and the reason why I've pulled up United Utilities, which is a UK stock, is to point out the fact that we're definitely not short-term traders. Like, the minimum time frame we trade is daily, and there's a reason for that, because we don't want to be sitting around waiting for 15-minute opportunities to come and go. I mean, trading that time frame, many people do it successfully, but many people also fail at it badly, and they end up just spending their life with their eyes glued to the screens. So, this came early in the apprenticeship for, I think, Gilby, this trade, and you can see how many days had to expire. We nearly got stopped out here. The market didn't close above it. It had a tail go into our protection lines there. So in the end, it collapsed. There was a profit taking point here, and then eventually we closed the rest of the position out at that point there. More recently, I might even just add in some support and resistance levels, so you guys can just see how easy they are to add to your setup. And look, in any setup that you do, like, ChartIQ's got that cool feature where you can just save your view. So like I could add a bunch of indicators and then just save that view. So I could go from this simple view that we're looking at now to something a bit more a bit more informative if you're looking to delve a bit deeper. So there's one set about support and resistances. I mean, I like to use them because it tells me when we're approaching support and resistance, and when the program's likely to tell me to start taking profit. Okay, so I'll add that one in as well. All right. So another recent trade we had was EWZ. This is like an ETF of Brazil. Okay, yeah, I love these trades. When I say these ones, it just my eyes light up. The market sort of broke out from down here. We were stopped out pretty quickly on that opportunity. But when you get these big gaps open up, and the market just runs hard into them, like nearly always you get these big reactions down, and we certainly capitalised on that. I was pretty happy to see that sell signal come up, and you're probably wondering, well, what is this line? We can actually work out what it is. So if we come back down into here, I'm going to add a few of these time area studies that sort of tell us what's going on at the much higher time frame level. So here, I'm going to change this to high. Okay, done. Okay, there it is. All right, so what we're looking at in the study at the moment is qualified high prices over different time frames. So this orange line that we're looking at, that's effectively a high from an annual candle in a previous period, and so the market was rallying up and it slammed straight into a high from an annual candle. Okay, so we then know then that this blue line that we're seeing up here is actually the high from a previous year, and so we've actually made a new annual high. So the market's therefore bullish, but typically you're going to get a reaction from hitting such an important level, and that's what we're seeing now. So that's why this got such a powerful reaction straight away, because we slammed into a previous high. And you have the capacity to track all these things with our time area study. So at the moment, we're taking some profit here. We're waiting. The trailing stop's now sort of rapidly falling. If price were to go back over that, then we'd be out of this position. But look, the next sort of support is down here around the 32 level. So there's every chance that this market could continue to drop. If we have a look at Harley Davidson, this is a position we probably won't hang on to for long, because the market's we've got the election coming up, and although we've had the trade on for quite a while now, it's not developing. So we can see at the moment, we're selling resistance, which is what we always want to do. The stop's up here, protection line. But we're thinking we might just exit this trade, given that the election is on Tuesday, and then just revisit new signals after that. So, conversely, if the market has sort of already broken down a bit, we'd probably be more prepared to leave that trade. And look, you can view. It's possible to view different parts of the candle as well. Like if you want to pick out important, say closes from previous time periods, and this study will do it. There you go. So what this is doing is working out relatively important closes. That red line there is the monthly close, and so we're now trading under it. So therefore, immediately the market's bearish, and we can see that there's a few gaps appearing on a closing basis. So gaps down to 52, 59, and then obviously down to 45, which would put you around here. We're going to keep this pretty short today, but I just want to have a look at a couple of the other trades that we've had on. TWE, it's Australian stock. We made some good money out of that one. Had a sell signal at resistance up here, and it was very well behaved, came down to support, and we closed the whole trade out. We're not re-entering a long position on this coming into the weekend. Sorry, coming into the election. if we were to have a look at E-mini, E-minis and actually all the indexes are really important at very, very interesting spots at the moment. So, if we look across time, there's a gap down to 2035. If we close under 2035, the market can really break down. But at the moment, there's gaps in highs, and we're at basically a final support around this sort of 2065 to 2075 area. If we start cracking under that next week, then I guess the market can drop if we sort of start closing under that 2065 area. But the big one would be like a weekly close under this this level down here at 2035. And look, the Dow Jones is the same. It's there's big gaps opening up underneath, as you can see, but there's final supports in here around 17,700 before it can really fall. So everything's on a dime at the moment. Market could explode upwards, or it could break down very, very easily, and it's sitting on a gap below. So last one, just quickly, like dollar index, obviously had a big breakout in the lead up just recently. But what's interesting to note is that the high that we put in around 99 was just simply the market bouncing off an annual level. Okay, so we saw that coming straight into this orange line, which is the annual level. Got the sell signal. That's that was quite a powerful signal. So look, I might just stop sharing screens there. I've kind of dumped a fair bit of information on you, and I might just see if there's any questions. And look, we're going to do this each week, so there'll be plenty of opportunity for you to ask questions. So I might just come out of my queue and stop screen sharing and see if there's any questions. Look, if you want to check out the website and get involved with us, I'm just going to punch in the website now. Okay, there's the link to our website if you want to get involved. In terms of the questions, there is still some places left in the program, so feel free to get on board. They'll be filled up pretty quickly. We had a great response last week. Do we trade FX and other markets other than stocks? And the answer is, well, yes. The process is exactly the same. So it's just a matter of selecting the market in ChartIQ. Other question is, so how do we find out about the books that underlie all this program? Well, I think if you go to our website, I gave you the link there, then you'll get access to the books. And look, if you're interested in technical analysis, that's probably the way to do it. So look, I might just leave it there, everyone. I'll just wrap it up. It's just there's a bit of information in that one, and look, we're going to keep coming back to it from week to week, but I hope you see just how involved and powerful the program really is. Even though we've made it very simple to use, there is a lot of information driving it. So on that note, I'm just going to hope you all have a great weekend. Thanks for joining, and I will see you next weekend for our next Masterminds. So checking out for now, and see you next week.